You are listening to chartingwealth.com for Wednesday, the 25th of July, 2018. Everything is up for the day. The S&P 500, the Qs, of course, that's the NASDAQ 100, TLT 20-year bonds, and gold. Let's jump first, as we always do, into SPY, Standard & Poor's 500. Going into our third week of up movement, we bounced off that red signal line starting there on the week ending the 6th of July. Going into our third week of up movement. Now, I still am calling out a little bit of caution because we're still within where we were the prior week. It had looked a lot flatter yesterday. So things do seem to be moving up, though, nicely. Another 0.5% up. Price movement is above the weekly and the 2-day. Derivative oscillators gaining a little bit of energy. Price percent oscillator heading up. We like to see all of that. We go from the weekly to the 2-day. This is the way we always start. Big picture and then smaller pictures to see how things are playing out. We see that the 2-day chart is pretty much, the derivative oscillator's not quite flat. It moved up just a little bit. We can see, though, as far as the Heikin Ashi candlesticks go, we do have a nice one that is in the process of forming, again, just the first day of this latest 2-day candle. But it is starting as a green candle, so that is good to see, a green open box candle. And again, price percent oscillator heading up, price movement, as we said before, above the 2-day and the weekly. We go from the weekly to the 2-day, and then the 4-hour. What do we see happening in the morning? Lots of up movement in the morning, and a bit of a backtracking in the afternoon. Not enough movement to actually have the 4-hour chart cross over, so we're still in the backup. It sort of lost some of that momentum. We do see the derivative oscillator continuing to lose downward momentum. Price percent oscillator has just not agreed to cross over going up yet. Keep your eye on it. Might cross over in the morning, might give you a jumping in point to continue to ride this up train. How long will the market go up? It'll keep going up until it doesn't anymore, and that is all you can say. You try to start forecasting things, you get yourself in trouble. What do we talk about here over and over again? We are trend followers. Follow the trend. The trend is your friend. Trying to prognosticate and guess which way the market is going and when it's going to turn is a fool's errand, and you will many, many times lose. And again, first rule of trading, don't lose money. Second rule, make money. Let's go now to the NASDAQ 100. Of course, it's at a confirmed up move. Derivative oscillator, however, is losing momentum, even though price is moving up. Again, keep your eye on things. We want to continue to see the candle grow throughout the week. It is the weakest that we've seen so far in 3 weeks. And again, it's just the beginning of the week, but derivative oscillator losing momentum, price percent oscillator still heading up, not jolting up, but again, still heading up. And we do have a green candle forming with a wick on top. Don't see a wick on the bottom, so that's a good sign. What do we see on the 2-day chart? It's gaining a little bit of momentum, it looks like, on the price percent oscillator, almost flat, but gaining a little. Derivative oscillator. Price percent oscillator is heading up, but it's flattening out some too. And again, price movements above the 2-day and the weekly. As we dig a little bit deeper, what do we see on that 4-hour chart? Still, again, waiting for it to cross over so we can jump into an up move. It hasn't done that yet. Up in the morning, pared back some in the afternoon. That exuberance, we saw it wane off. So again, keep your eye on things. We have a crossover. You can jump into a practice trade on a long move on QQQ. Same with SPY. You'll pick one if they both cross at the same time, whichever one gives you the strongest continued up signal based upon all your charts all the time. Okay, we're going from the Qs, and again, up 0.41%. We go to TLT, 20-year bonds, up 0.34%. Now remember, 20-year bonds were in a confirmed up move over 4 weeks, ending the week ending the 13th of July. And then this last week, we had a red spinning top, which means indecision, not as much as a doji, but indecision tending down. And of course, again, that down move has played itself off so far, with the week beginning with some strong down moves. Now again, up for the day, but that weekly candle that's only really representing 2 days so far is still a big down candle. Derivative oscillator losing momentum, has been since it peaked out on the week ending the 13th of July. So price percent oscillator heading down now, derivative oscillator heading down, but again, don't have a crossover going down yet. Still in a confirmed up move on the 2-day and, well, on the weekly, and the 2-day, not a confirmed up move, actually crossed over going down on that candle ending Monday the 23rd. And so far, this latest 2-day candle is a strong down candle. Also, price movement, of course, is crossed below the weekly and is below the 2-day trend line, as it should be with this 2-day down move. And again, continue to keep your eye on things. Haven't had a change in the weekly yet, but have in the 2-day. We're going to make sure to make that official by changing our arrow. The beautiful thing about the type of charting software we use, provided to you by freestockcharts.com and the paid service TC2000, we have $25 off your subscription if you look at the show notes posted at anything, whether it's at the website, whether it's on the email. For those of you who subscribe for free, you need to do that because you get all the extra bonuses there. Plus, you can also see the discount that's offered for TC2000 at our YouTube channel. So you can find it anywhere in our show notes and also on our iTunes, our podcast. So please subscribe if you want to have the professional version, and it's what you need to get as you get serious about trading. Again, I don't know of anything better. I've used TC2000, it's free stock charts, for many, many years now. Great, great software. And it's all web-based. So what we see is, again, 2 strong down candles, this latest one forming, derivative oscillator gaining downward momentum, price percent oscillator heading down. And as we look at the 4-hour, that's where you'll see a bit of an up move. Do we have a bottom that's formed here? Don't really know. We saw some up movement start from there in the morning where it ended the day before, paired off a little bit in the afternoon. Price percent oscillators losing downward momentum. The derivative oscillator, rather, losing downward momentum. Price percent oscillator not flattened out yet, but losing some of that steeper edge that it had been trundling down over the prior 4 candles, ending on that 2-day candle on Monday the 23rd. So we'll continue to keep our eye on things and see what we see. Again, that was representing 2 days of movement. So what we'll just do is continue to watch and see if indeed things bottom out, start to spin around, but we really don't have a trade in TLT right now because we have that schizophrenia between the weekly chart going up, 2-day chart going down. Just got to see how things play out and which direction the charts are going to move in. So don't have anything right now on TLT. We go from TLT to gold. On that weekly chart, again, gold's been in strong down moves for many, many weeks, but for 3 up weeks, which again weren't very strong up weeks other than that, all the way back from when things started moving down strongly on the 27th of April. That week ending then, we have just seen week after week after week of down moves. Let's see now, we're continuing to move down. Derivative oscillator gaining momentum, price percent oscillator heading down. We look on the 2-day chart. Now this latest 2-day chart does appear to be sort of flattening out a little bit. It sort of bottomed out back on the 2-day candle ending Thursday the 19th, and since then has been really more sideways than anything else. So keep your eye on things on that 2-day chart. You can't have a change in trend until that 2-day chart rotates around. But watch it and just see what happens. Derivative oscillator losing downward momentum. Price percent oscillator is about flat. We go to the 4-hour chart, and of course we can see where it crossed over going up in the morning on the 23rd and really has been sliding sideways for the last few days. So keep your eye on gold. Again, don't know where things are actually going to go at this point, but we'll watch. And again, if that 4-hour chart rotates back over going down, of course, remember the 2-day chart still in a confirmed down move, as is the weekly, so might give you some more down moves to play. And that last play on the down move was a rather good one in gold. It took off heading down back on the morning of the 13th and really bottomed out all the way down until the 19th. That's where we are, folks, as we end the day on Tuesday and go into Wednesday, the 25th of July. If you haven't purchased our book, we would sure appreciate your support. Purchasing that, Charting Your Way to Wealth, explains everything that we do, and we always appreciate your support. We love to hear from you. chartingwealth1@gmail.com. You have questions, problems, concerns, let us hear from you. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.